Hi guys, welcome to Gold. Today this video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Wednesday, it's a big day. It's really a big day. We are waiting for the ADP non-farm employment change for month of October and the GDP quarter to quarter for the third quarter and the interest rate decision and the FOMC statement, all to be considered as market movers. That's all for the economic calendar. We'll move on now to the numbers. On the last trading session of Tuesday, we have had a trading range from 1483 to 1494. Numbers are rounded and the market is still open. Gold spot is expected to print a close price above 1489. The numbers rounded and the market is still opened. Gold is trading in a bull trend above its all daily simple moving averages, except the 20 days and the 50 days daily simple moving averages, and the momentum is seen strengthening for the RSI readings. It's moderate on all the charts. It's 61 weekly, 67 monthly, and 46 daily, and the supports are seen about 1488, followed by 1482, and then 1473, and for the resistance levels it's 1497, followed by 1502, and then 1517.8. That's all for the numbers. We'll move on now to the trading strategy. On the last trading session of Tuesday, gold and silver both continued their sell-off. The equities is no doubt pressuring the precious metals, and such sell-off is normal and actually I welcome such sell-off because this is a dip that you buy. Again, tomorrow is the FOMC statement and interest rate decision. This moment I do prefer to stay in the middle and not to take a side, and to watch until we get a clear view about how the Fed will act and how the market will react. It's true the Fed is in a better place than the previous two meetings with the Brexit ease and the progress and the trade deal between US and China, which both were among the reasons that the Fed been justifying its rate cuts. But on the other hand, the Fed is seen increasing the size of its balance sheet and buying back bonds, which can put more power, to weaken the US dollar. Maybe the Fed is still going to ease the monetary policy more, and this is what I do believe in. Technically, gold is still bullish. It's back below the 20 days and 50 days daily simple moving averages. Gold is supposed to trade in a tight range until the FOMC statement is out. If gold is to rally, we need to hear more about easing and clue that the Fed is going to continue to cut interest rates, which they are supposed to say it in a way like we are going to do the needful to sustain the expansion in the economy. Gold is bullish and liquid and it's ready to rally. There is no technical limitations, and if it dips before the meeting to 1475, which is in theory or theoretically the lowest low gold could reach, buy it and clear it before the meeting taking place. For me, I'm a buyer of gold on any dip. I already bought and I'm convinced that a rally is going to take place in gold. So either you wait until the FOMC statement is out and the interest rate decision is out, or you buy the dip. The nearest to 1475 is the better. Thank you guys for watching. That's it for today. Please share, like, and subscribe, and I will see you tomorrow in another video.